The chart is a visual representation of the dynamics of asset price changes. Binomo offers 4 chart types: line, mountain, bar, candlestick. Asset prices change every second. These changes are displayed as individual chart elements. These are points for the line and mountain chart types, bars for the bar chart, candlesticks for the candlestick chart. The period during which one element is formed is called a time frame. The minimum time frame is 1 second for the line and mountain charts. The point is the final price of the asset at the corresponding point in time. The mountain chart is easier to understand, as it has a more contrasting representation compared to the line one. The minimum time frame for these chart types is 5 seconds, because it is during this minimum interval that one candlestick or bar can form. Let's compare the 5-second line chart with the candlestick and bar. On the time frame of 5 seconds or more, you can identify the initial asset price, opening price, the final price, closing price, and the maximum and minimum price, high and low, that the asset has reached over the interval in question. This very information, but in a more readable form, is presented in a bar or candlestick. The distance between the opening and closing prices makes up the body of the candlestick, and the segments going out of the body make up shadows or wicks. The upper shadow shows the maximum price of the asset in this time frame, and the lower shadow shows the minimum price. The green body of the candlestick means the price was growing. If the price was declining, the body of the candlestick will be red. In this case, the upper part of the candlestick body means the opening price, and the lower, the closing price. Bars display the same information but look different. The ends of the vertical lines show the maximum and minimum prices of the asset in the selected time frame, while the short horizontal lines show the opening, left, and closing, right prices. If the asset price has grown, the short horizontal line on the right will be higher than the one on the left. The body of the bar will be green. If the asset price has dropped, the bar will be red, and the short horizontal line on the left will be above the right one. The line chart is the simplest but not the most convenient way to represent price movement. It can be used to identify the general direction, whether asset prices are growing or falling. But the moments of abrupt and significant changes are not so pronounced, and it is precisely such moments that are the most important in the analysis. Let's look at an example. On the line chart, we see that the asset price was changing all the time. At first we observed a decline in the price, followed by a rise. At the end of the stretch we see the price started falling again. But will it continue? To make a more accurate forecast, we should understand if the asset's closing price in the time frame was higher than the initial opening price, but the line chart does not register this information. If we look at the same asset on the candlestick chart, we clearly see a rise in the price, with the green candlestick is clearly larger and higher than the red one. And the closing price is obviously much higher than the opening price, so it can be assumed that the trend will continue and the asset price will rise. This means that you can make a forecast that the price will go up. So, candlesticks themselves are an indicator that helps analyze price movements, which means that this chart type is more informative and useful for the trader. Besides, it is the candlestick chart that almost all trading strategies are based on. Click the chart icon in the bottom corner and select the required type from the drop-down list. The choice of time frame depends primarily on the expiration time the trader expects to set. If you want to trade short expiration times, 1 to 5 minutes, you should use small time frames, 15 seconds to 5 minutes, so that you can analyze in more detail how the asset price changes over short periods of time. To make trades, say, for 1 hour, it would make no sense to analyze the 5-second or daily time frame on the chart, since in the former case you will see intervals that are too short and do not enable you to correctly predict the price change within the hour. In the latter, 1 day, the time frame will be too long and will not be showing the hourly price changes. The time frames recommended for such an expiration time should be chosen from 15 minutes, so you can see the trend inside the hourly time frame. To up to 1 hour, so you can see how the price changed from hour to hour. Besides, the choice of time frame often depends on the indicators and strategies that you are using. Click the 1S icon in the bottom left corner. Select the time frame you need. Now you know chart types and their differences, what a time frame is, which chart type to choose, what the selection of the time frame depends on. We wish you successful trading!